All my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life, I've been grinding all my life. Look, all my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life, I've been grinding all my life.
Hey everyone, how's it going? Back with the Market Unpacked. It's me, Mitchell. It's been a while since I did the last video, and I think we got some news to talk about. Keep you updated on the Market Unpacked portfolio. We've been making some moves in that one, a few additions to that one in the last couple of days, and we've got some market announcements that we can go through. So let's get it started. We'll start with the portfolio. And in the last couple of days, yesterday, we actually added Appen to the portfolio. This is a stock that I have been watching for years now. I first caught my attention when it was probably about $4 a share or so back in 2017, I think it was, early 2017, and now it's currently trading around just above $32. So we definitely missed out on some really good gains there. Back then it was a riskier play. It certainly had the growth, but it wasn't as big as what it is now. So I've been watching it, and I think that with the business, the way that it's heading, its acquisition that it had with Figure Eight, I think that was just about over a year ago now. The solid numbers that are coming out of the business with respect to its growth, and just the way that the world is really heading with more artificial intelligence and machine learning. There's a need for their product or for their service, which is annotation of data sets and then providing that back to their clients. So I've sort of looked at Appen, and I worked out that given its price, it was fairly reasonable. A PE ratio of up near 90 or around 90. I thought that's quite high, but with its expected revenue growth in the near future, that's probably not that bad of an evaluation for the stock. So I was pretty happy to pick it up. Cost basis on that one, $31.72. So we're already up a little bit on that one, but I'm very comfortable with this stock. If it was to fall, if it was to fall back down to $25, $20 a share, I would be loading up even more on this. I think it's a good company for a long-term hold. So we added that one to the portfolio yesterday, and this afternoon we actually added another stock that was actually on the watch list that I posted on the Facebook page and other areas, Discord and Instagram, which was X-Tech. So if you in the Discord or on Facebook, you would have seen that I posted about a stock that is a massive growth opportunity in my eyes. It's definitely a business that it could amount to very little. The growth potential is there, but it's never a sure thing. If it was a sure thing, everyone would be going out and buying this stock. But I think that the business, as it currently stands, is really well positioned for it to capitalize on its products and its offering. So a little bit of news came out of it, I think it was yesterday, about a loan facility that they've gotten through the Commonwealth Bank of Australia. So they announced $2.5 million of a loan facility, and this money is to be used to invest in equipment for the mass production of their XT Clav ballistic helmets. So they've recently, earlier this year, they've finalised their state-of-the-art manufacturing facility in Adelaide, and that is going to enable them to make commercial-sized quantities of their armour plating, the ballistic vests that they sell, as well as commercial size orders of their ballistic helmets as well. And recently we saw they had the order from the Finnish army for their armor plating, and that order actually got upsized, so they thought that it was quite a good product. They were happy to actually increase the order size. And I think in this announcement, if I just have a read through this, I think they said something along the lines of that they progressed quite well. Significant progress has been made with international customers recently, and we are working towards finalizing the first helmet order in the near term. We look forward to accelerating our commercialization strategy and further showcasing our advanced manufacturing capability. And the reason I like this business is they have existing contracts or business through the Australian Defence Force with the supply of parts and maintenance for drones, and their armor plating that they manufacture through a patented manufacturing method that allows it to be much more it's much more bullet resistant to penetration from bullets or anything of that nature, while being very lightweight. So, and they actually, I believe they actually sell the equipment that they have a patent on. So it's just another area of business that they can get money through. So I finally bit the bullet on that one on X-Tech, because I had been watching it, and I initially put my sentiment on this stock when it was probably about around the same price as it is currently, 68 cents, up around here, and it fell down. We hit about 56 cents, which seems to be, that 555 seems to be a pretty consistent support level over the last couple of months. And it's really rapidly bounced back off that support level. So I think that given that they've secured their debt facility to enable them to make these commercial sized quantities of the helmets, I think now is a good time to actually get on board on this stock. And this is one that I only added a small portion, small holding into the portfolio, and my intention is, as news progresses, if they get a solid contract with the government once, or the army, the defense force, or if they get another large size order from another country overseas, or even within Australia, then that's the point when I start to think, this company is really starting to gain traction, and it's more appealing to me to put a bit more money into it. So we added that one this afternoon at, if I just scroll down in the portfolio here, by the way, if you haven't seen my videos previously, and you want to have full access to this portfolio, jump in the Discord group, which the link is in the description of this one, and you can get full access to all the holdings within my portfolio, as well as keep up to date with the current value and how it tracks against the ASX 200. But on X-Tech, as we can see down here somewhere, I've probably scrolled past. Just trying to find it. There we go, XTE. So yeah, our cost basis on that one is 68.5 cents. I'm pretty happy with that, and I'd probably be happy to buy more if it dips again to, if it hits around that support level again, around that 56 cents, I'd definitely be adding more at that point. But yeah, that's currently where the portfolio stands. It hasn't been having a great run lately, and that's largely due to how heavy I am on the cash holdings currently in the portfolio. As you can see here, it makes up about 14% of the portfolio, so really heavy on the cash at the moment, even with the recent holdings acquired with Appen and Xtech. And the reason for that is I'm still a little bit cautious when it comes to the near-term outlook of the economy and the near term of earnings. I really don't want to be deploying too much cash until we see some of the earnings coming out of these companies. And some might say that I'm missing out on the opportunity because a lot of these companies, when they report their earnings, that's when, if it's a bit of a surprise beat, that's when they really jump. And in the same way, it can work against you. So I'd much rather sort of stay on the sideline a little bit, wait to see some of these earnings, and then once I get a full picture from some of these earnings being reported, that's when I'll be deploying more of the cash. And that's just the way it currently stands at the moment for the portfolio. So Kathmandu is the largest holding at the moment. All-time relative best performer after pay has been on a huge tear. We're up 960% now on that. And overall profit loss on the portfolio is around 17% at the moment, which isn't too bad. It's a little bit below the ASX 200, and that's mostly because of my recent holding in cash. I haven't got too much weighting on the resources or the financial stocks, which banks have been performing really well recently, so I've sort of missed out on that a little bit. But yeah, that's the current market unpacked portfolio. And we'll jump into some of the news from today. So massive news that made the stock absolutely moonshot today, which is Split It. As you can see, up 108% in a single day. It's just mind-boggling sort of stuff. So Split It came out with an announcement today that they were partnering with MasterCard. And to me, I think this is a multi-year partnership. But in the announcement, the way that it's described honestly sort of sounds like MasterCard they're sort of sneakily trying to get the secret sauce. MasterCard has the money and probably the talent to make their own platform, but a lot of the time it's branding, it's the name, it's just getting the Split It logo and the name chucked up against the MasterCard one to get people comfortable with, okay, now MasterCard's sort of doing that thing as well. They're getting on board, or MasterCard's in amongst that space now. And yeah, so I think MasterCard is just trying to make sure that they're staying within this whole boom within the buy now, pay later space. And I honestly wouldn't be surprised if come towards the end of this partnership that MasterCard either takes a stake in Split It and actually, they might buy 20 or 30% stake in Split It, or they might just end up completely acquiring Split It. I think that we'll see more of that acquisition, merger and acquisition happening in the next probably 24 to 36 months. It's probably longer out than what a lot of people are thinking, but it seems like a very saturated space. Everybody's trying to get on board, and at the end of the day, the big players, your MasterCard and your Visa, I think they're going to integrate a lot of these smaller ones that jumped on board after Afterpay. And you got Klarna, that's with Commonwealth Bank, Split It, MasterCard. I don't know too much about the other ones like Sezzle. I think Sezzle might be partnering with Visa. But a lot of these other ones, they'll probably end up partnering with MasterCard or Visa, and it just be a game of your MasterCard, Visa, maybe Klarna and Afterpay is sort of how I see it developing over the next year or two probably. But that was an interesting announcement to see, and people just have gone mad on it this afternoon when that came out, for the share price to double in a day. I think people are really expecting that Split will be quickly adopted by people, given the scale of MasterCard. If Split can integrate really seamlessly into a typical payment method that people are used to through MasterCard, it will take off. It's definitely beneficial to split it with this partnership. So that came out this afternoon. There's a little announcement there. So the title of the video, the stock market could go crazy. And that's mostly me talking about the current situation with, there's a lot of people saying second wave of for the Rona, the Roni. It's coming back. We're starting to see numbers bounce up again in the United States. Some of these places, I think we've never finished the first wave, honestly. It seems a bit weird to be saying a second wave when the first wave hasn't really, even the United States, I mean, it started to slow down a bit, but I wouldn't say we dropped drastically. I'd still say it's pretty much the first wave, just picking up pace a little bit. But anyway, in regards to this, I think that this could have bigger implications for the stock market. Now, we saw last week, I think it was, with the massive drop, almost I think it was about 7% on the US market. This is actually the volatility chart that I've got here. Let me just click this one, and yeah, so we saw this massive drop in the market last week, and that was on the concerns of this potential of a second wave, and it fell sharply, but we've bounced back pretty quickly from that fall. And honestly, I think that fall was pretty reasonable. I wouldn't have been, I would have been fairly content with if the market had held around that level, considering that we're not back to a level of normality yet, and this difference in price, if I just pull out the measuring tool and measure from here to here, only down 5%. If an average year in the stock market when things just aren't booming, how we've seen in the past, 5% down would have been, expected, fairly reasonable. But given everything that's happened and the way that the economy is and the unemployment rate, for the market to only have been down 5% is pretty crazy. If we had held down here, down 13%, now I would have been thinking, yeah, that's reasonable. That's, honestly, you could probably push it down even further and still think that's fairly reasonable. So, the market has bounced back a fair bit, and we're starting to see that volatility come back in. Nowhere near the level of volatility that we had at that peak, or peak in volatility, but the absolute bottom of the crash. But we still had a massive jump in volatility, and I think this volatility will continue to play out as news keeps evolving of the second wave, as it would seem, and the sort of further, I'd say, medium-term implications of how the slower than what would hope to have been a bounce back in or elimination in the cases altogether. The US is still in a state of just craziness. It's crazy over there, and cases are just not under control at all. And there's a lot of other places in the world that's the same situation, where the cases just aren't anywhere near under control at the moment. In Australia and New Zealand, places like that, we're in a really good situation where even though we may have uptick in cases, we're in a really good place where the numbers are very, very low. But around elsewhere in the world, that is not the case, and because of that, that's going to continue to have ramifications on the economy. We're going to have a slower than what was hoped return to just a normal operating of business. So I would expect that this volatility will continue, and the stock market will go crazy. We'll get massive moves up and down, and I saw an interesting post from Nick Fabrio on Twitter. If you don't follow him, he's an Australian bloke I don't know how he does it, but he day trades like an absolute pro. Like, what he does is magic. But over on his Twitter, he posted that the way that he sees things at the moment, it's very much looking like, if I just pull up this index, the US 500 again, things now are starting to look very similar to how they were late January, early February, when we started to get a lot of this news about the cases increasing and the spread. But the market fell a little, pushed back up, fell a little, pushed back up, fairly unfazed about it. And he was sort of saying that it looks fairly similar to that now. We've got this information, insights about a possible second wave. The market fell, but we pushed back up, fairly unfazed, no issues. We might take another fall, but I wouldn't be surprised if we push back up and largely stick with this upwards trend. But as we can see back here, that only lasted for so long before we took a really bad turn for the worst. So I am being very cautious with my portfolio, and hence why I have that 14% allocation to cash in the event that the market does go crazy and we might fall another 10 or 20% from here. Could fall, anything can happen, but there's nothing to say that the market falls another 10 to 12% if things aren't under control, and we continue to have a slow return back to normal business operations. And on top of that, we're starting to see now the figures of the effect on jobs. So Australia's come out in Australian unemployment rate out today at 7.1%, which is the worst in 19 years. That knocks confidence, and it's not an indicator, but you can look at that and say, if you have a large percentage of people unemployed, that can be expected that business isn't anywhere near the same level as what it was previously. So a lot of businesses are probably doing smaller revenue, and if they're doing smaller revenue, profits are going to be hit, and it doesn't make much sense that some of these businesses are valued at pretty much what they were before all this happened, when their earnings will be hit. So I'm staying very cautious and wary of what could happen, and I'm not pessimistic. I think the economy could bounce back quickly still, but this is around the time where it's sort of make or break, and any money that you're putting in at the moment, and as you saw earlier, I'm still putting money in, but I'm not being as aggressive as probably what I would have been if we weren't in this situation. So any money that's put in right now is nowhere near the sort of confidence and probability that you would have had 12 months ago in putting money into the market. So hence why I've sort of dialed it back a bit, and I'm being a little bit slower in jumping on opportunities. There are opportunities out there. There's always opportunities in the market, but I'm just a little bit wary of what can happen if the economy takes a turn for the worst. So there's a little bit some other news out today. So Air New Zealand provides 2020 earnings guidance. So they've came out and they've sort of given a bit more clarity to the ramifications of the coronavirus, and airports shutting down, flights being cancelled, and it wasn't the best, hence why the stock has taken just a bit over 5% hit today, because of some of these numbers that have come out. So a lot of these have been revised upwards, or if there was previously there was no consideration, now they're considering a financial loss for a lot of these areas. For instance, this de-designation of hedges, the interim impact previously reported, they said nil. They weren't really expecting any financial impact. Now it's more like 85 to 105 million, and this is all throughout. Now, Air New Zealand is well positioned compared to a lot of other airlines, though. Their balance sheet is very, it's quite good for an airline compared to others. And given that restrictions are being looked at with allowing flights between Australia and New Zealand, Air New Zealand is well positioned to actually do to do some business again quite soon, if all goes to plan. Excuse me. But yeah, a bit of news out today about that, and they took a little bit of a whack. Austal, they've won another contract, $43 million. It's for the United States Department of Defense, for modification to a previously awarded littoral contract ship. Littoral? I don't know. The modifications provides Austal with a total potential additional value of 43.362 million, which is 62.7 million Australian dollars. So that's a big win for Austal, and I've been watching this company a fair bit lately too. Wish I had picked it up back in that bottom there, but I think it's in that area, defense area. I'm really keen on any defense stocks at the moment. That's why X-Tech really appealed to me. It's got that exposure to defense. Any companies that I am adding to the portfolio at the moment are going to be companies that are well positioned, even if there is a second wave, even if things go turn a turn for the worst. I'm adding to the portfolio shares that are well positioned for that. So, Appen is in the AI machine learning space. The second wave isn't going to affect it too much. Maybe some businesses spend a little bit less money on using Appen services, but it's not like the business is going to take a huge hit. And the same with X-Tech. It's in defense, so a lot of that is going to continue. And I mean, if you look at the United States, we've got riots and everything going on, although that's starting to calm down a bit. All those guys wear, the police and the army and that, they all wear armor plating, and that if that gets cut or whatever might happen to it while in use, then they get new armor plating. It's a pretty easy business to understand, and regardless of what happens with the economy, they're still going to sell it. So that's my overview, my perspective on that. We had Shaver Shop come out with some good figures. Oh, excuse me. Didn't get much sleep last night. And yeah, I won't go right through that, but Shaver Shop, they sort of talked about that online sales really took off. I'm just not sure if I'm streaming now. My live video, just got to check this if it's still working. Yep, cool. So yeah, they were talking about online sales had increased, which is really good for the business. Those are the businesses that were able to pivot quite quickly and adapt, and they're the ones that will get the head start on everything reopening, because they've had the cash flow, they haven't had to make massive cuts. So Shaver Shop is pretty well positioned moving forward as well. Kogan, they successfully completed their $100 million placement that they announced, I think it was last week. So that's to fund potential other acquisitions for the business. It's good to see that that was completed. I think that, it was oversubscribed. So, oversubscribed. So strong interest in that. And Temple Webster business update. E-commerce, if you haven't heard them before, they sort of sell furniture and homewares online. It's has really done quite well over the last probably 2 years or so, really taken off. And I actually started seeing the ads for it on TV only recently. So they must be doing pretty well. So they put out this business update and some massive growth numbers coming out of them. Year to date revenue up nearly 70%. Awesome numbers. So Temple and Webster, and it jumped up 4.8% today. So I'd be putting Temple and Webster on your watch list. I think these are the sort of businesses that in the long term they're going to win. And I know people sort of say that the online market becomes saturated and there isn't space for everyone, but you have to remember how many businesses operate bricks and mortar, and they all, most of them manage to survive. So I think there's plenty of space, and the ones that are on the online space now and do it well will be the ones to become quite large in the next 5 to 10 years. It's only going to continue a trend towards online shopping. So cool update to see. So guys, I think that's probably it for today. If you want any other info on certain stocks that I bought, why I did it, more reasoning to it, or if there's a stock that you're looking at and you maybe just want a little bit more of an opinion on it, and that's purely it's just opinion. I'm not a financial analyst. It'd just be me putting my 2 cents in. You can take it for what it's worth. Flick me a message on the Facebook page or jump in the Discord and add it in there. We've got, I think, over 20 people now in the Discord. It's really starting to become a really great little community. We've got people sort of talking amongst themselves, chucking in info here and there. So it's really awesome. If you're not in the Discord already, I definitely recommend that you get amongst it. So thanks for tagging along, guys. I'll catch you in the next one. Bye.